Fine. Start, guys. Hi, welcome back to accounts. We are resuming AS 15. Previous session we discussed which one? Short-term employee benefits. To summarize, short-term employee benefits for exam viewpoint had three things: salary and wages, then bonus, compensated leaves. Salary and wages account when it is accrued, then bonus when it is announced or there is obligation for company to pay. Compensated leaves we classified into accumulated and non-accumulated. Accumulated means you can carry forward, non-accumulated means you can't. If you can't carry forward, no entry. Within accumulated we have carry forward as vested, you can encash, non-vested you can't. Encash means pass the entry for encashing or create provision. Non-vesting means create provision, provision will be paid next year. It becomes adjusted in part of your salary. So the debit to P&L is on accrual basis. That previous class example 13, 11, all of 13, 11, 12, 12. Do you remember that, guys? Clear? Now moving on to the next section, which is called post employee benefits. What is it, guys? Post employee benefits. What are the benefits employee gets after he resigns? That is termination benefits. VRS is termination. Post employee is basically gratuity or pension. Let's take two scenarios. Now, scenario number 1. In India, it is mandatory for companies to contribute for PF. The idea is after you retire also, you will still keep getting income for about 10-15 years. Okay. I'll give you two scenarios. Tell me which is correct. Okay. Left hand side, let's write Reliance. Right hand side, let's write Tata. Okay. We'll write, let's say, Sau is working in Reliance, and let's say, we'll put, let's say, Pavitra is working in Tata. Okay. Now, follow. Both are getting the same salary. 1 lakh per month each. Now, let's say Reliance, in that 1 lakh, every month they are depositing 12,000 rupees as PF yearly guys. 1 lakh per month, per year it becomes 12 lakhs. So yearly they are depositing 12,000. It's actually a much higher amount. I'm keeping something simple. Tata is depositing for Pavitra also 12,000 per month. It will actually be 12,000 per month. I'm taking 12,000 as per year. Okay. This PF is given to whom? Government. It's given to government. So one small change. What Tata is doing, Reliance is giving this PF to government. Tata is giving this money to Tata Trust, a group of Tata itself. Okay. Now, after retirement, who will pay this money to Sau? Government only is responsible. Now, government is responsible. Is Reliance responsible? Reliance's responsibility ends if they deposit this PF in the government account. Are you following, guys? That's it. If I deposit, my duty is done. But this side, where Tata is depositing to Tata Trust, who is responsible to pay this money to Pavitra once she retires? Tata Trust, Tata Group itself. Let's assume Tata only owns this Tata Trust. Am I allowed to pay PF instead of paying to government to private companies like Tata? Some companies will be like, see what government will do after collecting this money? Can you tell? I'm collecting now. Let's say in the year 2025, Reliance contributed to PF. Government will keep with them until Sau retires. Let's say Sau is retiring in the year 2065 after 40 years. In 2065 only, government will give the money to Sau. So these 40 years, guys, government should take care of the money. That means they have to invest in some bank, FD, all of that. Correct? Same way here, Tata also. Tata is investing in the year 2025. They will give it to Pavitra. Pavitra in the year 2065 after 40 years when she retires. Then this 40 years, government or Tata Trust will take care of this money. How they will take care? They will reinvest in some safe investments. Which is most safe? Government. But government will keep in risk free. But Tata is saying, you give it to me. If something goes wrong for the money, I will compensate. But I can invest in better place than you. Government is like, okay, if you give the assurance to Pavitra that she will get the money, then it's fine. Are you understanding, guys? So now in both these cases, Reliance is, sorry, just a moment. Very sorry, recording. Reliance's headache will come to an end once they deposit to government. They don't have to bother whether Sau is actually getting the money. But Tata's headache will be there till the time Pavitra retires, until she gets the money. That means the benefit, so who is getting the benefit back here? Sau or Pavitra? For them to get the benefit back, when they will get this benefit of contribution? In the year 2065. The liability or the risk of not giving the benefit, Reliance doesn't have. Only government has. But here, Tata still has. Tata still has that risk of going and giving that benefit. So, post-employee benefits are of same for gratuity, same for PF, everything, okay. Post-employee benefits are now classified into two. One is called DCO, one is called DBO. If the standard is complex, it's because of what we are going to discuss now. DCO is called defined contribution. DC, yeah, defined contribution plan. I think we should call it DCP then, but it's, yeah, defined contribution plan. Abbreviation, what I'm saying, this said it's called defined, you write full form, guys, leave the short form. Defined benefit plan. So I think it should be DCP only, guys. It's just the short form which I'm keeping. Okay. Defined contribution plan and defined benefit plan. Forget the terms, sir. Get the logic. Now, can you guess in these two examples which is Reliance, which is Tata? From the name. Janeshwar says, see, sir, defined complex, sir. So that only is a complex thing. So can I say this is Reliance? Because their work is to contribute and headache is over. Defined benefit plan, they have to contribute, and until the benefit is going back to Pavitra, I still have headache. That's why D, Dolo. Are you following, guys? Okay. Hey, don't write all this in exam, guys. Okay. Clear? You will write Dolo. Already the examiner will be irritated, guys. How many papers is correcting? Okay. I'm telling all this because I've seen students. I think just 2 days back was the exam registration deadline for foundation or inter, I think, for the next attempt. After the inter or foundation something, after deadline, one student messaged me, sir, I forgot to register. What to do, sir? I said, next attempt only. Sir, do you know somebody in council, central council? Can you send them a mail? Even if I know a president, even if president is my uncle, nothing can be done. Institute rule means rule. Nobody, even if Modi ji comes, next attempt only. Okay, fine. First of all, why Modi ji will write, guys? I'm just giving example. Okay. So clear, guys. So look at this. Defined contribution plan. I'll just run through the points again. Employer's contribution. Reliance contribution is restricted to the amount contributed. Those who are watching recording, everybody, material is there. You will get the soft copy. Actual risk of liability and investment is not borne by the employer, is not getting the risk of liability, actual risk of liability and investment, meaning where I invest in those 40 years. Accounting. Whenever you contribute, account it as a debit expense, credit, bank, that's it. Correct. Every month I will contribute. Record expense, contribution, as and when the obligation arises, and contribute to the PF expense account, debit to bank. Are you following, guys? That's it. This is not defined contribution, is not complex. Okay. The entity can have two types of funds. Controlled fund by themselves, trust. Non-controlled, multi-employer. Some big companies together will form their own fund. State plan, government or insurance schemes. Sometimes the risk is transferred to insurance companies. Are you following, guys? Okay. Now, meaning, sir, what, sir, you're saying entity, the fund is controlled by the entity themselves, sir. Meaning, some other separate legal entity. Some other separate legal entity, guys. Are you following? In the example I told you, Tata and Tata Trust are the same. Imagine Tata Motors, Tata Trust, two separate legal entities. Then it will come here. Two separate legal entities will come here, even though it's the same group. Now let's take a simple income tax example. Mediclaim. What is Mediclaim? Section 80D of Income Tax Act. What is Mediclaim? Medical insurance. Let's say every year I will pay 20,000 rupees. If any medical emergency comes, hospital bill 2 lakhs, 3 lakhs, who will compensate? Insurance company. When you work in a company, especially big, good companies, the company itself, for you, they will pay that Mediclaim to some other insurance company. That means as an employee, even in your professional work or personal life, if you meet with a medical emergency, you will get bill reimbursed by whom? By company or insurance company? Insurance company. Company is just giving you a feature. Okay, come join my company. I will even cover your insurance cost. Now this contribution that company is doing for Mediclaim is defined contribution or defined benefit? Defined contribution. Because my work ends once I contribute, I don't have the headache of liability. Let me give an example now. Second example. Let's say Dhyaneshwar is working in ICICI Insurance. Now ICICI Insurance is contributing for Dhyaneshwar's insurance itself. He is an employee of insurance company. Now insurance company is saying, if Dhyaneshwar needs some emergency, we will give that money. Now I am only contributing. Later if money is needed, I should only give the benefit back to Dhyaneshwar. This is defined benefit plan. Are you following, guys? Now defined contribution is done, guys. Are you following? Defined benefit plan only is the heart of this standard. If a 5-mark sum comes in this standard, it has to be from defined benefit plan. The rest of the standard, whatever you see in the notes, this full side, this everything is for defined benefit plan. They do accounting using something called PUCM, projected unit credit method. This is what we are going to learn. So far is the standard complex or difficult, guys? Hello? Easy. I told complex in the starting. It's easy. Have the same mindset even after I finish this. Projected unit credit method. It's actually easy, guys. If you can, why I spend so much concept from start is to give you that same concept over here. Projected unit credit method. Let me give you a background for you to understand this. Okay. Beautiful method. You will start enjoying the subject, even though it's last topic. If you start enjoying now also, it's fine. Okay. Now, let's take a scenario of gratuity. What gratuity says? What does it say, guys? If you work for 5 years, what will give you? Gratuity Act says, let's say Anjana, all her life she is working in State Bank of India as a CA. Okay. 25 years she worked in State Bank. If you see our parents, our grandparents, they generally would have worked in one company for almost the entire life. At least somebody in your family. Only our generation, let me also include myself. Our generation only we keep jumping. 2, 3 years, 5 years. If you see today's Gen Z, okay, they keep jumping here and there. I will not put myself in Gen Z, guys, but millennials, whatever. Okay, put myself in millennial. Okay, fine. Even millennials keep jumping companies. But one law says, if you work in a company for more than 5 years, you will get, apart from salary at the time of retirement, 15/26, which is nothing but 1/2 into last drawn into number of years of service. Let's say you work for 5 years into 5. Number of years completed. Yeah, number of years completed. Let's take an example. Anjana worked in SBI for 25 years, guys. Okay. When Anjana is retiring, what could be her salary? Not when she is joining. When she is retiring, guys, what will be the salary? Yes, Anjana. What do you want the monthly salary when you are retiring? Tell me the amount. What is your dream? When I am retiring, I want so much salary. Yes, Anjana, fast. Everybody is waiting for you. 2 lakhs only you want when you are retiring. Kalyan, 5 lakhs per month. Okay, fine. Anjana, 2 lakhs. For this YCA, you could have done BCom. Work for 25 years. 2 lakhs will come. I will guarantee. Okay. Even 5 lakhs is small, guys. At the time you are retiring, monthly salary can be easily 10, 15, 20 lakhs. Easily. Work in the same company for 25 years. Good. Work well. 10 lakhs per month. Easily you can take. Okay. But let's keep 5 lakhs. Guys, come back. So Kalyan, we've changed from Anjana to Kalyan, recording students. So Kalyan has decided he wants 5 lakhs when he's retiring. So he will get his last drawn salary 5 lakhs into 15 by, what is 15/26? Basically 1/2, half a month. Half a month. He worked for how many years? 25 years. How much is this? 72 lakh, 11,538. That means roughly guys, if Kalyan works in a company for this long, when he is retiring, apart from PF, he will get this. Apart from PF. Now let's take a scenario. Let's say Infosys in Vizag, Andhra Pradesh opened a new office with 5,000 employees. Or why 5,000? 25,000 employees. Huge office. IT campus. IT jail, sorry. 25,000 employees. Infosys opened in Vizag, Visakhapatnam, Andhra Pradesh. They started now, let's say, in the next, how many people? If I work for 4 years, I will get off. One of my friend worked in Bangalore in a company where he was getting almost 2 lakhs per month salary. He worked for 4.8 years. Okay. He was deciding to quit. Then I said, you wait for another 4 months, you will get 2 lakhs into 5 into 15 by 26. How much? 5 lakh 76,000 he will get. Take that and retire, I told. Resign. He wanted to come back to Chennai. He said no. I said why? Just 4 months. He said no, my heart is broken in this company. I can't stay in the company anymore. 4 months. He said money is not important. Mental health is important. I will come back. And he came back. Okay, fine. Example, forget about it. Okay. Now, follow guys. When I said heart is broken, if you understood means okay, otherwise leave recording. Okay, fine. Now, come back guys. Come back to this 25,000 employees. How many people you think, very important, this discussion is important guys. How many people you think will work here for 5 years? Infosys, Visakhapatnam, Vizag. How many people? Rough number. Can the company predict? This depends on age of the employees, gender of the employees, location of the employees, what kind of a job, what industry it is, which year are we in. It depends on multiple factors of. Are you following? But can the company tell, let's see after 5 years, whoever is there, I will pay them. Imagine in this 25,000 employees, 5,000 employees stayed for 5 years. Let's assume the average salary of each employee is 50,000 into 15 by 26 into how many years? 5 years. So 5,000 employees, average salary 50k, 15 by 26 into 5 years. How much you are getting? How much? Roughly, exactly, Roman guys. Roughly 72 crores. Now, you tell me guys, 72 crores may be an outflow if 5,000 employees are there. Now, you tell me, will you leave it? I will take care. Let 5 years get over, or you will start estimating and saving money from first day of. Estimating and saving money. For example, Rajaram wants to get married, destination wedding, Switzerland. Okay. It's his dream. He will start saving from now. Why? He will see, let me see, when I'm getting married, I will take care of. Start saving now itself. Correct? Now, follow guys. Same way, when company has an outflow, somebody has to save it. This estimation is not easy. There is a lot of probability and statistics because of all of this. So who actually does the estimation? We have a separate professional called actuary. It's a separate course apart from, which is much more difficult than CA, which has 3 levels. In India, there are less than 1,000 qualified actuaries. If you're actuary, you're settled in life, that like that, 3 levels. Sir, my favorite subject is maths, means that's your course. Probability 1 paper, statistics 1 paper. All papers are maths. So, guys, follow guys. They will do this estimation and they will tell me in year 1 save so much, in year 2 save so much, in year 3 save so much. How do they compute? They compute using projected unit credit method. Then why are we studying? So as per standards of auditing, an auditor can rely on the expert actuary to get this value for accounting. But as an auditor, if somebody is using that method, I should be aware about it. That's why we are also learning how to do that method. Okay. Clear guys? Got the context? That means I have to start saving from now itself. Now let me give a simple example. Now I'm bringing the numbers to I'm giving you background guys. Background is very important. Now I'm bringing down to a very simple example. Let's say I have one employee, Infosys, one employee, who's drawing 5,000 rupees per month as salary. Let's keep the numbers less. And he worked for 5 years. Simple numbers for simple understanding. So 5,000 per month into, 5,000. Okay, let's change it to 5,000 per year. I want to keep it very simple, guys. Very simple and easy because we're getting into complex computation. So 5,000 into 5 is 25,000. Let it be in lakhs. Let it be in crores. 25,000 is what I need at year 5 ending. And this employee has told, I'm going to stay here. I like this company. I'm going to stay here. Radharam likes Tesla. He told, I'm going to stay here for 5 years. Okay. So I need to pay Radharam how much? 25,000 guaranteed. See, I'm trying to create a scenario. It's actually not guaranteed. It's actually an estimate. Who does the estimate? Actuary. But let's take a scenario where Radharam is saying 25,000. We have to give him after 5 years. Now I am in year 0. How much should I save every year? So I will get 25,000 in year 5. How much should I save? Year 1, 5,000. Year 2, year 3, year 4, year 5, 5,000. Then year 5 ending, I will get how much? 25,000. Is this correct? Is this correct? Will you get 25,000 in 5 years if you save 5,000 each year? In starting of the chapter, I told you something is prerequisite. Time value of money. So I need to save the present value of all of this in each of the years. So I will get how much? 25,000 in the 5th year. Are you following, guys? So how do we compute this? Follow. In year 1, I have to save 25,000. Assume discounting factor is standard always 10% for our example. How much should I save in year 1? Give me the answer. First year. You are dividing 1 by point into how much? 4, 5. So you are saying save 4, 5. 4, 5 in which year? Year 1. Year 1. Year 1 starting or year 0 end? After 1 year, guys. Okay, year 1. Now. So you are saying if you say, I need totally 5,000 times 5, I should get 25,000. Now watch carefully. If you save 4, 5, 4, 5 in first year interest is how much? What is 10% of this? 4, 5, 4, 5 into 10%. How much? 455, 10%. 455. Add both. It becomes 5,000 in year 2 itself. It should become 5,000 in year 5. Are you getting the logic of? It should become 5,000 in year 5 and not in year 2. That means point 0.9091 is not correct. Hello, it should become 5,000 after how many years? I'm investing, let's say, in year 1 end. Okay, so it should become in year 5, 5,000. How many years are there? Year 2, year 3, year 4, year 5. I have. That means you have to discount by 4 years in first year. Correct? See, if you discount by 1 year, you are basically, look at this. 5,000 is at year 1 end. If you discount this, it becomes year 1 start. If you discount at 10% for 1 year, that means within 1 year it will again become 5,000. Only if you discount year 5's 5,000 in year 1, it will become 5,000 after 4 years. Are you getting it, guys? I will prove that to you now. Are you getting the logic of? So, year 1, year 2, year 3, year 4, year 5. Year 5 I will invest only 5,000 because same year. Now look at this. Now discount for 4 years, meaning I want 1 divided by 1.10 to the power of 4. I am investing in end of year 1 or year 1. How much is coming? 0.683. Are you getting it, guys? Now how much is coming? 3,041. Let's check this. Let's check this. Add 10%. How much? 10% on 341. Well, after adding it, how much? 3, 7, 5, 6. Again add 10%. 376. 41. Again add 10%. 413. You get 45. Again add 10%. 455. 5,000. That means perfect. Yeah, clap, please. Clap. Okay. FM. I am not teaching you accounts, guys. FM. That means, follow, guys. That means only if I invest in bank, follow. If I invest in bank 3415 now, it will become 5,000 at the end of 4 years. Are you following? For a long time I am thinking to start FM class. No time. Okay. Because all my subjects are in group 1. Group 2 presence is not there. Okay. No other subject is there except FM which I can take. Okay. No, auditing not mine. SM not mine. Okay. Separate discussion, guys. Not planning for next 1 year. Idukke time illa. Okay. Okay. Guys. Follow AS15. So I should invest how much, guys? 3415. Are you getting it, guys? That means the unit I have to invest today is 3415. It projects and becomes 5,000 after 4 years. So the method is called projected unit credit method. Are you getting it, guys? Now let's do for all the years. In year 2, you have to invest 1 divided by 1.10 to the power of 3. How much you get? 5,000.751. Can I erase this corner red color computation to write the discounted thing? I will still, if you are not understanding, let me show you for all years. I will prepare one table for you. So now 5,000 into 0.751. 3, 5, 6. First one we saw, just now saw. 3. 5,000 into 0.683. 3, 4, 1, 5. Third year, 5,000, 1 divided by 1.10 to the power 2, 1 divided by 1.10 to the power 1. Again 5,000. Here you will get point, double discount. How much? 82. Here I know point. 90. Multiply and tell me, guys. This into this, this into this. Third one. 4, 1. Here. Last year. Okay. That means year 1 I should invest, save. Year 1 I should invest, save 3415. Year 2 I should save 3756. Year 3 I should save 4132. Year 4 I should save 4545. Year 5 if I keep the same 5, then it becomes 25,000. Let's check this. Let's check it, guys. Will it actually happen? Hold on. I'm going to do the whole table for you. What we used to do in AS19, but a reverse table of AS19. Look at this. Year 1, year 2, year 3, year 4, year 5. Follow. In year 1, starting, you are going to invest 0. I am investing only in year 1, end, because end of the year only I will estimate. So year 1 interest is at 10%. Okay. So if I don't, 1 second, year 1 if I don't do 2, 3, 4, 5, correct. Year 1 interest is nothing. Year 1 I am going to invest how much, guys? 3, 4. 3, 4, 1, 5. Interest is not there for this year. Let me write interest. Okay. Cumulative balance is 3, 4, 1, 5. Year 2 starting is 3, 4, 1, 5. Year 1 I get interest of 342, and year 2 you are investing 375. How you got 3756? This. So what is the cumulative balance at the end of year 2? Beginning 3415 plus interest plus year 2 investment. So total will be 71. Are you getting what I am doing, guys? See, year 2 beginning I had in my bank account 3415. Then that year I got interest of 342. Then that year I invested 3756. End of year in my bank account I have 7171. Next year starting 7171. Interest 717. Third year I am investing 4132. Cumulative 7171 plus 717 plus 4132, guys. Come on. 12,000. 0. 2. 0. Starting at 12,000. 0. 2. 0. Plus interest 120. Plus in year 4 you are investing how much, guys? 10. 1202. Yes. Add 3415 with 342 plus 3775. Why? Check, guys, before I erase. No. 3756 is the investment of year 2. 3756 is year 2's investment. How much you are getting? 75. No worries, recording students, don't blame me. Or nothing, no one to blame. We'll again redo it. Okay. I should have taken the calculator, but leave it. Okay. No problem. Okay. Doing this is good. But don't do this in exam. Okay. 3415 plus 342 plus 3756. How much? 7. 1. Plus also I wrote, no? Okay, fine. We'll again redo it. 7513 plus 10%. 751 plus investment in year 3. 4132. Wrong. 4132. So cumulative of year 3 is, I had 7513, interest on that is 751. Additionally I saved 4132. How much? 12,000. Then again 12,396 plus 1240 plus in 4th year I invested 4545. Now 18,180. 5th year starting 18,000 plus interest 1819. I'm just rounding off. Plus 5,000. We will have rounding off difference. How much? Exact. Are you following? Are you understanding? It's okay. Don't worry about what went wrong, guys. If you understood this, it's fine. That means I'm making a statement. Tell me if it's correct. First, we'll thank Lakshita for correcting us. Okay, yes, thank, guys. Recording students, clap for her. Those who are watching. Fine. Now come back. Come back. All recording, everybody. I'm making a statement. Tell me if it's correct. If I invest this much amount in each year, I will end up with 25,000 in the end of 5 years. Who decides this amount? Actuary, not CA's work. But whether he is deciding correctly and doing this correctly, I have to audit. To do audit, you need to know how to do it first. Okay. So what entry I will pass for each of these things? My entry will be P&L account, debit, to create a provision, because it's for after 5 years. That's why I'm discounting time value of money. First year will be 3415. Second year will be 3756, each of the 5 years. This is going to be on my liability side of balance sheet. On the asset side, this money I have to invest somewhere. So it will be investment account debit to bank 3415 in the first year. So my balance sheet will look like this. Asset, investment 3415, this side provision 3415. Are you following, guys? Everybody understanding? Clear? This only, this basic thing, sorry, yeah, this 3415, this 3415 is not called salary over here. Same terms, I'm now connecting with technical terms, guys. Only reason why standard may look complex. Now look at this. This 3415 is the first provision I created in the first year. That is called opening provision. I am talking about liability side. Then first year, you added interest of how much? 342. What is the entry for interest? No, second year, that interest is called add interest cost. Then first year ending, you had something where it became 3415. First year ending it became, no, first year was 3415. Second year it became 7513. Now I'll write the values here. Help me with these values when I go here. First year you wrote 3415. Add interest 342. Add current year new provision 3756. 37. Leave this past service cost. I will tell you later what that is. Okay. 3756. Leave this benefits, but I will explain later. Leave change in actual assumption. This closing liability in end of second year we got 7513. 75. There are other adjustments. I will tell you when that comes. So this 3415 is called opening provision. This add 342 is my interest cost or finance cost. The current year investment or current year provision that we are creating is called current service cost. Because he is serving this year in the company, it's a cost for me that I have to pay him after 5 years. Understanding meaning of the term, guys? I would have anyway explained it here. What is current service cost? What we debited each year. It is the yearly present value of actuarial estimate. This would later compound to future value computed in the year of retirement. Are you following, guys? Understanding? Same on asset side. We invested first year 3415, opening fair value of the, and on asset we will earn interest. That we will come to it later, guys. I don't want to get to asset side now. Liability side you understood, guys. What is debited to P&L? That also we will come to it little later. Are you all clear with this? Now with this background, let's quickly do one same sum in study mat, which is just like this. Jump to illustration number 9. Employee Roshan. Last sum before we end this session and gain full concept clarity of this. Mark this as important. This could be a copy paste. Instead of Roshan, they will ask Rahul. 5-mark question in exam. Illustration 9. Everybody has this? Totally how many sums you have? 12. Quickly we'll finish, guys. If I finish concepts, sums are quick. Okay. An employee, Roshan, has joined the company on XY settlement in the year 2021. The annual emoluments Roshan decided is 14 lakh 90,000 210. That means annual salary. How in our example? 5,000. 5,000. 50,000. 5,000. What is getting every year is, we found the present value. How many of you understood logic of that, what we did? That only is PUCM method. Okay. Still lot more is there. We are in the basics. Okay. The company also has a policy of giving a lump sum payment of 25% of the last drawn salary of the employee for each completed year of service. Here they are giving 1/4. We gave 15/26. They will change in every question. Okay. If the employee retires after giving minimum service of 5 years, that means he has to work for 5 years. The salary of Roshan grew at 10% per annum. Okay. The company has inducted Roshan in the beginning of the year and is expected that he will complete the minimum 5-year term before retiring. Estimate, you have to create provision. This line is giving confirmation that he will stay for 5 years. Thus, he will get 5 yearly increments. What is the amount company should charge in its P&L account at a cost of defined benefit obligation, DBO? Correct, actually it's DBO. DCO, correct, we saw, guys. I wrote as defined benefit plan, defined benefit obligation, defined contribution. Okay, DCO, defined contribution obligation, defined benefit obligation. There we saw start of thing, DCO, DBO. Okay. Also calculate the current service cost. What do you mean by current service cost? He wants you to prepare this table and find this in each of the year. So it compounds to become 25,000. What is the 25,000 I have to find first? Also calculate service cost and interest cost, assuming discounted. Same sum. Instead of 5,000, something in lakhs. First I need to find in every sum, what is this 25,000? What is he going to get after 5 years? What is the data for that? How much will he get after 5 years? How much? Take a minute, go through the sum recording. Everybody will do it together, guys. Quickly, I'll give you 30 seconds. Can you try and compute? The idea of doing recording with me is we will do it, but I want you to apply your mind, recording students. Otherwise, I can do and you will copy. You will copy now and you will forget it before exam. Try to find what he will get after 5 years. Or at least find out salary into 5 years is how much? Salary into 5 years is how much? Guys, all of you with me? Okay. What is the salary here? Just to save time, recording can pause and try it if you want to try. 14 lakh 90,000. 2. Can I multiply by 5? No. Why? The salary is increasing by 10% every year. Correct? That means inducted in beginning of expected he will complete 5 years. Okay. That means first year he will get 1490 210. Second year he will get plus 10% of, how much is that? 16 lakh 39 231. Again plus 10%. Year 3. Are you following what I am doing, guys? Each year you keep adding. This third year 18 lakh 154 plus 10%. 19 lakh 470 plus 10%. Year 5. 21 lakh 81. This is year 5 starting off. Year 5 ending again plus 10%. How much? Are you getting 24 lakhs, guys? Why 24 lakhs? Most of you would have stopped with 21 lakhs. Why? The formula is last drawn salary. So, year 1 ending is getting promotion. Hike means year 5 ending also he will get hike. So, I will take. But is he going to be given 24 lakhs? What is the equation saying? The company also has a policy of giving a lump sum payment of 25% of the last drawn annual salary. That means he will get only 24 lakhs into 25%, 1 by 4, 6 lakhs. So he is going to be given only how much, guys? 6 lakhs. So what he will be given is 6 lakhs into 5, 30 lakhs. Correct? So basically what equation is given in question is last drawn salary into 25% into 5 years gives me 30 lakhs. Sir, how sir 25%? This question 25. Some other question, some other person what they give. Law is silent means 15 by 26. Are you following, guys? This is company's choice. 15 by 26 is not mandatory. Company can change as per Payment of Gratuity Act. Okay. 30 lakhs is what I have to give him. So, end of year 5, I have to save 30 lakhs. This 30 lakhs, in our example, it was 25,000. Now it becomes easy. Correct? Let's cross check once if answer is correct. Look what they did. At least we did each year. Add. He straight away did 14 lakh 90 into 110 5 times. Each year 10. Maths, guys. Into 110%. Into 110%. You can save time in exam. Are you getting it, guys? Each time. Calculator, sir, we do the answer. Because, sir, shouldn't we show this, sir? Step marks. Did he ask this? No. And this is step. So you got 24 lakhs into 25 into 5, 30 lakhs is what we got. Every year he has to debit 6 lakhs. Now what you have to do next? Year 1. First year I have to debit 6 lakhs into discounting factor of 1 divided by to the power of 4. End of first year or beginning of? He is inducted at the beginning, but salary will be paid at the end of the year after completing service. This year you don't discount. So what is 1 divided by 1.08 into 4 times, just like 1.1? 0. Given in question, thank you. But even if they don't give, this is first year, second year, third year. Reverse. So this is first year is 1, second, third, fourth, fifth. So first is 1 year, 4 years they gave, guys. 1, 2, 3, 4. So you will take 0.735. Next year 0.79. One. Here I will write 6. It's same as last time, guys. There we did for 5,000. Now we are doing 6 lakhs. That means if I invest present value of all of this in each of the year, see how much you will get. Multiply, guys. Here we'll get 6 lakh itself. First one 4 lakh. 4,76,000. 400. 5,14,000. 55, 25 lakh, 80, 200. So what happens now? Sir, why we are not getting the same? How much you should get? 24 lakhs. Is this what you guys are getting? Let me check here. Same. Yeah. So what they would have done, I will tell you what they would have done. Total of all the same we got. Yes, we got the same. I will tell you they would have done one rounding of adjustment later. So we got the same. Everything is same, guys. This total should be equal to how much? 20. Sorry, not 24. Its present value. It should not be equal to anything. Basically, this it will increase and become 30 lakhs. Are you following, guys? Look at this. Over here, after you discounted all of this, we got not this table, sorry, this table. After you added all of this, did you get 25,000? No, I don't think you would have got 25. Not 25. You won't get 25. You will get 20,000, 8 something. This present value, see, 25,000's present value is this. You can't get same 30. 30 lakhs present value is 25 lakhs. Now let me do the same compounding table. Compounding table. Year 1, 2, 3, 4, 5. Interest at 8%. Current service cost. Now I'll write technical terms, guys. Current service cost. Total. Year 1. Opening balance. Year 1, 2, 3, 4, 5. Here opening. First year nothing interest. Current first year I'm investing how much, guys? 4 lakh. 40. Total closing will be. Next year starting is 4 lakh 40,000. Interest at 8%. Do it with me, guys. Do it with me. 35,000. 280. This second year I am investing 476. This time at least tell me correctly, guys. Plus 9 lakh 52 680. Sumaya has a different answer. 4 lakh 76 400. 9 lakh 52. Yes, some of you cross check the book. Next, third year will be 9 lakh 52 680. Interest how much? 214. Whatever you get, guys. Next, current service cost. We will take it from above. 514. Total 15 lakh. Leave the rounding off. I will tell you later what to do for adjusting whatever difference we get. There is a technique. Okay. Next, fourth year 15 lakh 43 plus 1 lakh 23 454 plus fourth year says 5 lakh 55. This total 228. Don't give me book answer, give me what you are getting. Next, this start is 22 lakh 22,000 228 plus 1 lakh 77,000 plus, it won't tally, I will tell you how to make it tally, plus 6 lakhs, correct? 6 lakh You get how much? 30 lakh? 0, 6 rupees difference, or 10 rupees, or 15 rupees. What ICA suggests here is, it's telling 6 rupees because of rounding off, that's why you are all fighting. Okay. Now, what you do in exam, look at this guys. Here instead of writing 30 lakh 6, you write this interest. Don't write 1 lakh 77, 778. What is the balancing figure? 772. Put a star and write approx. So closing becomes 30. Sir, my method, no. Book itself does that. They got something else with star. For them also approximate. So they wrote 30. Whatever difference comes, they are writing here. And you should give a note due to approximation used in calculation, figures adjusted accordingly. You will get the marks. Yes. Whatever institute does, if you do, you will get marks. You did the same thing, didn't write note, don't expect marks. Are you following, guys? Now, what is the current service cost in this? What is asking in the question over here? Look at this. Question requirement is calculate current service cost and interest cost. Both is done. Current service cost, interest cost. If I scroll down, next question. That's it. Are you following, guys? Understanding of standard, easy or difficult, guys? Hello. I told complex in the start. Easy or difficult? Genuinely understanding. Okay, now it's going to get much more easier only. But with this, what we have understood is the liability side of this standard. Still, the method is still not fully done. I have to teach some more. Keep this in mind. Those who are watching recording, immediately without any break, go to the next recording, 1.5 hours. This standard will get over. This we will end here just to keep your recording short. Hope you understood till here, guys. Thank you. See you all in the next session. Find the link in the description or wherever you are watching this, guys. Okay. Thank you.